Hey everybody, what's up? Today we will be going into ASML once again. Now, they have been pretty hot recently. Obviously, earlier this week there was the whole semiconductor industry mini crash that we saw across the entire sector. ASML is kind of a pretty big powerhouse in the industry recently. They're seeing a ton of growth. Their market cap is at like 250 billion. So, definitely something to really pay attention to. I think there is a ton of upside for this company. And yeah, let's get into it. Make sure to subscribe if you haven't, and let's start looking into ASML. So, ASML development, production, marketing, sales, upgrading services of advanced semiconductor equipment systems. Basically, all you need to know about the company. I'm going to be going through this video fairly quickly because it is 9:30 right now, and I want to get ready to go to sleep. So 260 billion market cap, a little bit of a dividend at 0.6%, which is fine. Um, Target price is at $917 a share, and long-term growth rate is at 15%, which is fairly large. Currently, we're at $700 a share, so definitely some fairly significant upside there. Other than that, just based on the mini chart here, you can see they've been going through a bit of a dip recently, but that's not too important just yet in the video. Mostly, I want to look at this growth summary right now. Massively positive across the board, other than with a little bit of short-term free cash flow, seeing some negative there. But overall, important stuff, sales, net income, long-term free cash flow, all look very positive, which is fantastic. So anyway, speeding along here through the company. I'm also going to do a new thing here where I add a little bit of a valuation analysis. I did this in my last portfolio update. And basically, what I did was I just did some basic valuations based on competitors and their sector. So I'm going to do that with this company as well and show that here. But first, let's go through their financials. So, first of all, 2024, we can see the preliminary data as well as the data of the first 3 quarters here. So, expecting to surpass their previous fiscal year in sales, which is good. Operating income looks very positive. Actually, seeing a slight decline there, just based on what we have available now, as well as with net income, which generally could be okay. Obviously, they had a ton of sales growth recently, so it most likely is fairly difficult to manage that. One thing I will say though is that generally you want to see them increasing side by side. So the margins here are going to be lowered once we get into the ratio analysis, which is mostly fine, but we'll see that in a little bit. Total shares are decreasing every single year that we can see here, which is very good. Moving on to the balance sheet, should have record amounts of assets if I had to guess, which very much they do. Massive amount of asset growth, which is definitely contributing to that sales growth as well, which we were seeing earlier. Also, no short-term debt at all, and compared to their cash, they have very little long-term debt, and also they have decreased it massively in 2024, which is really good. So they have a ton of flexibility here to basically do whatever they want with expanding and growing their company in the future. Moving on to the cash flows, we could see operating cash flow. So despite this is also in quarters, by the way, right here, but despite 2024 having a little bit of a decrease in profitability, we could see their cash flows have been fairly solid, although they were higher actually in 2022, which we're seeing back here. And it looks like in 2023, they basically just decreased throughout the year, which is the complete opposite of what we're seeing in 2024. But we're seeing a operating cash flow of $12 billion here, which is excellent. So hopefully we can see that continue into the future with that massive amount of almost $10 billion in free cash flow. Anyways, investing activities looks normal, not too much going on here. A little bit of investments being sold off in the past year. Other than that, you can see they have been continuously repurchasing stock every single quarter, which is fantastic. Also, obviously, they have their dividend, which is very consistent as well. And it actually looks like they're paying out more and more in dividends every single quarter, which is also really good to see. And that has been going on for the past roughly seven quarters of dividend increases there, which is perfectly fine. However, also before that, it was much higher, but either way, looks pretty good. And then obviously, again, free cash flow, very positive. Heading into the ratios now, we should see a little bit of a decrease over the past few years. So gross margin is consistent, which is good. And actually, let's zoom out to the years here so we can see it. Hopefully, they have 2024. If they don't, we'll go back. But okay, yes, they do have 2024. So above the 5 year average, which is good. Net margin is coming in a little bit below, which again, we saw. Same thing. Actually, operating margin is just about falling in line there, but net margin is lower, which is overall fine. But we do want to see that at least have consistency. However, it is nearly in line with their 5 year average. One other thing to show is their debt to equity ratio, which we saw earlier. They have very little debt, and this is a very healthy, just under 20%, coming down significantly from their 5 year average at 35%. So overall, looks really good there. But anyway, let's get into the one document I do want to show, just with their last earnings, as well as they are increasing their dividend by 5%, which is cool. But one thing to note, last quarter report beat on earnings, gave fairly solid guidance for the upcoming quarter. Gross margin beat consistently just about 2%. Net income came in a little bit over estimates as well. For the quarter one 2025 estimates, they came in above. For net sales, gross margin was above estimates as well, and R&D came in very high, actually just about 3 to 4 times higher. Sorry. R&D came in at $1 billion. SG&A came in at just under 300 million. I was thinking that's the estimates, but overall, that's perfectly fine. Fiscal year guidance of 30 to 35 billion. So now let's head back here, go back to the income statement and see their last year, which was 30 billion. Or sorry, their last full complete year that isn't preliminary or incomplete was just under 30 billion. So that kind of continued sales growth, if they can get that upper range, is fantastic. Gross margin coming in just about in line with what we're expecting. And one last thing, CEO comments, growth in artificial intelligence is key driver, create a shift in market dynamics, which is not benefiting all our customers equally, which creates opportunities and risks. So basically what they're saying is AI industry looks good. However, there might be mixed results based on company to company, which is perfectly fine. Also, 4.9% increase in their dividend, which is good. They also announced basically an interim dividend, which that's good too. Looking at their chart, we could see they had a fairly steep fall off, and now there's kind of a support range here, which I believe I drew this line the last time I reviewed them, which could have been towards the end of November or beginning of December. I honestly don't remember 100%, but if so, they did just hit the support again in the past few days during that kind of semi drop. And now I think they could be in a fantastic position to go higher. But first, what I'm going to do here is go into the valuation side of this. So first of all, we're going to go back to not the snapshot, where is it? Comps analysis right here, and we're going to go into valuations based on their competitors as well as their sector. So starting off with the semiconductor manufacturing equipment and services, once it loads up here, we'll show the valuations. So price to earnings, I'm going to go with 27.54, 28.9. You can see they come in basically right there as well. And I believe this is just the most up-to-date numbers right here. So one thing we can do is go into their income statement and see the most recent EPS, which would definitely bring us a little bit more information before we do this. So EPS at 7.3 compared to the current price at 712.65. So what we're going to do is I'm going to set this up in a little spreadsheet and we'll kind of see where the valuation is. So putting in the numbers, we have their price, EPS, got the PE ratio, sector average EPS, the median. I just averaged them together to kind of get a little bit of a better number for it and came up with the overall valuation of 512, which is $200 off of the current price. Now, one thing to note, which I will go into right here, is that there are many different types of companies that might not all be the same here. So some of these might be a little bit of outliers. Some of them might be right on the money, exactly the same companies. But overall, what I will say is that ASML is much larger than every single one of the companies listed here. So one thing I can do is click on named competitors, and we will see this as well, and I will change up the valuation for that also. So hopefully once this loads for me, we can get a little bit of a better view, and it looks like it is going to be some of the exact same companies, but overall it's actually significantly lower, the PE average multiples here. So overall, you can use this to say that compared to their sector, ASML is overvalued, which is a definite possibility. However, just based on where the support is on their chart, I do still believe that they are going to be going higher. Um, that's really just what it seems like is going to happen. The guidance that we've seen seems very positive. The earnings growth that we're seeing is very clearly positive. But overall, we'll have to see what happens. Compared to their sector, they seem to be overvalued. So take that information as you will. Make sure to do your own research. That's all I got for ASML today. Thanks so much for watching. Make sure to subscribe if you haven't, and I will see everybody in the next video.